Hello, and welcome to the Chicago Regional Council of Carpenters Supplemental Retirement Fund. My name is Lily Fuentes, representing John Hancock, and today's brief presentation is going to talk about how your future starts today, how easy it is to review your plan, and keep in touch with your account. A little information about us, John Hancock, your retirement provider. We have close to 160 years in the financial industry with over 8 decades of years working with retirement plans with great expertise, servicing more than 2.8 million participants just like yourselves spread all across the United States. Personally, for myself, I've been working with retirement plans for over 20 years, and I'm here to focus on the education aspect. I do not get paid commission whether or not you decide to change investments or make any changes. I am here solely to help everyone understand how your plan works. It can get confusing, a little bit about your basics and talking about the retirement future and your dreams, whether you're just starting out in your career or if you have just a couple of years left before retirement or anywhere in between. We want you to focus on how are you going to get to those retirement dreams. Maybe you dream of going south, moving somewhere sunny and warm, or having the extra income so that you can afford to go on sunny, warm vacations. Maybe you wish to stay relaxing at home, maybe pursuing hobbies or even volunteer work. So however you might envision your retirement future, we want to make sure that you are able to afford those dreams and take advantage as best as possible of all of the great tools and resources that we offer for you. So I'm going to show you in our web demo in a little bit how to use our retirement planning calculator. And through your personal retirement planner, you will be able to look at different ways to see how you might be able to afford this dream and add any additional income. Perhaps you might have other retirement savings and investments, hopefully. Maybe you have some home equity. I'm hearing more and more people who are mentioning to me that they wish to still work part-time just to maintain them in an active lifestyle. Many have a pension plan, maybe even from prior employers as well. I've had participants mention they are anticipating to receive an inheritance in the future or rental income property that some have been investing in and will continue to receive that income during retirement. And Social Security. Hopefully you have had an opportunity to go onto Social Security's website through ssa.gov and get more detailed information, although Social Security was never created to be a sole income for retirement. If we're lucky, Social Security might provide close to 40% of our income, so the rest of the income has to come from you. And that's why this plan is a wonderful feature to help get you to reach those retirement goals. Realize that with your eligibility to this plan is immediate for all participants, all members of Chicago Carpenters, and the entry dates are monthly pre-tax contributions deposited from the employer, and it's automatic contributions from the employer based on your collective bargaining agreement, and that money is defaulted into the target date fund, the investment through the Vanguard Retirement Target Date Funds, based on the date or the year closest to your retirement. However, that's why we want to show you through the website demo how to review different options to see if you wish to continue within the target date funds or perhaps use the opportunity and the tools and resources to make some changes. So you have the great advantage to earn compounded earnings year after year through all your investments, and you are always in control. You can decide if you wish to change your investments to go a little bit higher risk, lower risk, or pre-blended, or automatically adjusting, or just use a pick and choose on your own. So you're not alone, and you have various options with choosing how to invest your contributions. Yes, as I just mentioned, you have the defaulted target date portfolio. This is professionally managed for you and provides one-step diversification, which means by selecting the one target date fund, it's automatically adjusting within different bonds and stocks based on your age, based on your time horizon before retirement. It will automatically glide to be more conservative or lower risk as you get closer and closer to your target retirement year. So this involves a low level of involvement by you because it is automated. It will continuously rebalance. Or there are more and more participants mentioning that they are preferring to be more hands-on and like to do the homework and like to mix their assets and manage their own investments personally. Here you then need to revisit your strategy as needed. So it is a higher level of involvement by you because at least once a quarter, once every 3 months, or at least once a year or so, then you want to adjust or make your changes as needed. Now, there is no right or wrong method of how to select your investments. I like to use the analogy, it's like baking a cake. My mother's birthday recently passed, and I wanted to take a small cake to celebrate. We didn't have a huge party. It was just my husband and my 2 kids, and we drove by and dropped off the cake because we're still being socially conscious, socially distanced, and conscious of the pandemic. And I could have baked a cake from scratch, similar to building my own investment portfolio from scratch. I could have gone to the grocery store and bought the flour, the eggs, the oil, etc., and built my own cake or baked my own cake, similar to building my own portfolio. But instead, I went to the bakery and had a pre-made cake. So similar to your target date funds, it's pre-made. All the ingredients are added for you. Which cake would have tasted better or which investments are going to grow better? No, not a guarantee that one will be better than the other. If you think of some of your family members or great friends, some can be really great bakers from scratch, but some might not be the best homemade bakers, including myself. I might have included an eggshell when I'm cracking the eggs or something. So the same thing with a bakery. You might have a great bakery that makes great, awesome cakes, but sometimes the pre-made just doesn't taste that well. Again, there are no guarantees of how one version is going to grow better, the same as baking your own cake. Now, if you're looking at the target date funds, most participants say, yes, this is a convenience factor. Now, following the retirement date is a suggestion based on your time horizon. So if you have only 5 or 10 years before retirement, you're going to be closer to retirement. You're going to have to lower risk, lower exposure to stocks, more in bonds. But as you have more years before retirement, 30, 35 or 40 years before retirement, if you have higher years until retirement, yes, going a little higher risk, potential for higher reward, you're having higher exposure to stocks or equities and less in your bonds or fixed income. But the target dates, remember, they're automatically adjusting to go more conservative as you get closer and closer to retirement. So it will do the homework for you. It's automatically adjusting as you get older. And even after retirement, so even as you're at retirement year, it still has exposure to stocks and bonds, a little bit in cash, and through your retirement years as well, it continuously rebalances for you. Now, I have had participants mention to me, I like the automated, but perhaps I wish to go a little higher risk or a little lower risk. So let's say we're in the year right now, 2021. If you have 19 years left before retirement, the year 2021, add 19, that would be the year 2040. So perhaps you were defaulted in the 2040 fund. But if you wish to go higher risk, choose a higher year. 2045 or 2050 would go higher exposure to stocks, higher risk, potential for higher reward over long term. However, if you want to go lower risk, instead of the 2040 fund, maybe the 2035 or the 2030 fund, then that would be lower risk potential for lower reward, but again, lower exposure to the stocks. So this is where you can still use the target date funds, but go higher risk or lower risk and use the automated. Or if you are more hands-on, you wish to build your own portfolio of investments, you could go online for more information on your plan's investment options through myplan.johnhancock.com. I'm going to show you how simple it is. At the top of the screen, you will see the Manage tab, and there's a drop-down box. Select investment changes, and I'll show you some other shortcuts throughout the website. And for those who do wish to pick and choose on your own, but you still need a little guidance, we have what's called the Morningstar Retirement Manager. For no additional fee, you can click through the Morningstar Retirement Manager. I'll show you to scroll down and the red logo. And using the online tools, it opens up a separate web browser. It's going to say give us 10 minutes of your time. It really usually takes about 6 to 8 minutes. You're going to give your personal information and your goals for retirement. Are you going to retire sooner or later? Do you have other outside retirement savings? What's your risk tolerance? Can you sleep at night knowing the volatility of the stock market, etc.? So based on your personal answers, then you will get specific fund recommendations. Perhaps you might see a suggestion on selecting 5 different investments, 28% in one, 17% in the other, 11%, etc. And if you do select and say save, it will update your John Hancock investments. And then it suggests to come back every 3 months, again, at least once a year, once every couple of years. But it's not automated. It's not automatically going to adjust to go lower risk or more conservative. So you can log in at any time to see if you're on track or redo the questionnaire to see if you wish to, if you need to make any adjustments. So to access, really simply, through the myplan.johnhancock.com, scroll to the bottom and you'll see the Retirement Manager logo. I'll show you in a moment. Now, do you have any other outside retirement accounts, qualified accounts, like 401ks, 403bs, and some IRAs? If you wish to combine those all in one place, you can call this 800 number here, and our retirement counseling group can help guide you with rolling over if you wish to combine. You're not required to do that now. I'm just hearing more and more participants mention it makes it simpler, having everything easier to track all in one place, having a strategy with your investments all together, and potentially fewer fees, especially if you're paying other fees in other multiple accounts. So you can call our 800 number. They can walk you through step by step. Now, don't delay. Get started now. I'm going to show you through myplan.johnhancock.com, our user-friendly website, how simple it is. Plus, you have our dedicated 800 line for the Chicago Carpenters Group. So give us a call Monday through Friday, 8 a.m. until 10 p.m. Eastern Time. If you have any questions, they can walk you through click by click. So you're going to log in, but if it's your first time, you're going to register now. I'll show you when you click on register now. John Hancock is committed to keeping your account safe. So first, you're going to pick a user ID that's personal, difficult for others to guess, and create a strong password. Now, we are going to ask for you to please provide your cell phone number, mobile number, and personal email address. And the reason we ask for your personal information is because we will send you an authentication code for your security anytime you log into a new mobile device, laptop, computer, cell phone, so that you are aware that no one else is trying to access your account information. So really important to add your cell phone or your personal email, because if you have a work email, you only have access to that computer when you're at work and it's the weekend and you wish to check your account, then you won't receive that authentication code. Again, the cell phone number and personal email is the easiest. And I'm going to show you shortly then your user-friendly tools on our website. Our retirement planning calculator, my favorite, because it's going to show you how close are you to reaching your retirement goals. Plus, you have the Learning Center tab. When you click on My Learning Center, it's going to have more customized detail for you. Plus, our mobile device, if you're logging in from your cell phone, everything is custom so that you can see it and visualize everything through the phone as well, so user-friendly. So in fact, when you go online on our website, this is the home screen, what you will see through myplan.johnhancock.com. Before you even log in, if you scroll down, you're going to see these quick links here, a brief video on how to join, and a brief video, 2-minute video on how we've upgraded our website. Now again, these are generic website demonstrations because this is for everyone, and so you might not see all of the same options, but you will see here under Register Now to create your user ID, username, and password. If you forget your username or password, I've been guilty of misplacing passwords, then you can click here to reset. Again, having your email address or your personal cell, then you will get the authentication code for that. To register now, for the first time, we will request your last name, social security number, date of birth to be entered. And once you continue, that's where it will then go through your username, there we go, user ID, and your password, and scrolling further again for your email and your personal phone. So again, this is so that we can send that authentication code to you. Once you're logged in, your page will look similar to this. Again, not all the same details, but it will show your total balance at the top and your name at the top. When you scroll through, I'm going to come back to my favorite part, the retirement planning calculator, but scrolling down, here it will reflect your contributions. Now, of course, the contributions are employer contributions only in your plan. This is an employer plan, sponsored plan, all employer contributions only. But you can click through here to get more details about your contributions that were deposited. And here is a shortcut for your investments, your current rate of return, and the percentage year to date for John Hancock. In fact, if you click here on your investments, then it's going to reflect more detail. In addition to your rate of return, it's looking at your total balance, and it's color-coded here, showing the breakdown of your mix of investments between cash, bonds, and stocks. Now, if you're in the target date fund, it's going to look like one, but remember that one target date fund is pre-blending all within. And here on the right-hand margin, you can view fees and performance of all funds. If you click here, it will open up a couple of pages reflecting all possible investment options, even the ones you're not enrolled in, and the most recent performance as of the last month. It's updated monthly, 3 months, 1 year, 3 year, 5 year, 10 year, etc. So you can go through, view all of the different funds, but if you wish to change, simply view change investments. Again, here's your personal rate of return. Again, it's color-coded based on your asset classes, asset categories. So from your cash, stable value, your bonds, and your different stock funds. Now again, these are generic. These aren't exactly the ones you will see. You're going to have the option to see the ones you're currently invested in and scroll further to show all available funds. Again, you will see your funds within your lineup. And here on the right-hand side, you have the option to change your current or change your future mix of investments, or make current and future the same with the option for automatic rebalancing. So if you wish to pick and choose on your own and you wish to automatically rebalance, you can do this. And this is suggested, for example, if you chose 5 investment funds, just to keep it even, 20% each, They're not going to automatically stay 20% each because the market is going to shift from time to time. So some might increase where others may decrease. So the auto rebalance will do the adjustments for you so you don't have to worry about constantly checking it. Again, if you have the target date funds, the target date funds do that automatically for you. This is more if you're picking and choosing on your own. Now, talking about picking and choosing on your own, when I click back to the John Hancock logo at the top left, brings me back to the home screen. Here at the bottom, through the education tabs, you can scroll through and that's where you're going to find the Morningstar Retirement Manager logo. So this is where if you wish to pick your investments other than the target date funds, you can click through here. The web browser will open up a separate page and it will go through the questionnaire for you. And even further, scrolling to the bottom, additional shortcuts here on viewing your investments, and also under About Me to update statements. Now, going back here, before I go up to my favorite retirement planning calculator, I want to show you here My Learning Center. When you click through the My Learning Center, as I mentioned earlier, it is going to be custom for you based on your age and time horizon. And it first is going to start front and center asking, giving you an assessment, a financial wellness assessment. And this questionnaire is a brief questionnaire, 8 easy questions, just to see everything from A to Z, not only with retirement planning, but emergency savings, estate planning, are you financially prepared if you or someone in your family became disabled, etc. So going through, answer the questionnaire at the end based on your answers. Then you will get recommendations on viewing different modules that will target the answers that you need help on. And then you're going to start earning badges based on the modules that you complete. So here are some topics or some similar modules that you might see. Other topics that might interest you. If you click through, you're going to see the different titles. In fact, if I scroll through, let me go back here. You're going to see either planning for retirement, and again, your page is going to look different. Organizing your money. This is a popular tab, Organizing Your Money. We'll have debt worksheets, managing debt worksheets, or information about credit cards. The Investing tab is always a popular one. Through the Investing, as I was talking about earlier, you can get more detail, everything from A to Z. So whatever the topic might be, you will see all of these different modules. You can scroll through the different topics, the different modules based on your topic. Here you will see the risk quiz. It's a really easy, short 6 questions to check your risk tolerance. More details on the basics of investing, but scroll all the way to the bottom of the investing. I really like these short videos, just 1 to 2 minute long, on explaining diversification and mutual funds. Really great tools, and these are available at all times through the Learning Center. So this is the Investing tab. And again, anytime you click through, you are earning badges, or you can even click on the different hearts on which ones are your favorites. And scrolling back to the home, this brings you to the My Learning Center homepage. You can just go through, again, all the different topics. I want to show you the other one on the getting organized. Let me just double check. So this one's Organizing Your Money. Then another favorite of mine is Dealing with Debt. There's Life and Family. Dealing with Debt is another popular one. So you will see anything from worksheets, like a managing debt worksheet, or calculators, credit card payoff calculator, or another brief video, a couple minutes long, on what's a credit score. And again, you're earning modules based on the different topics if you're looking at anything here. Again, these are generic examples, but you'll see your specific ones that pertain to your plan. So go through, view the different categories. Oftentimes participants mention to me that they never even realized that they had these available. So it's free to use. At the top, under additional resources, there are also calculators just to see on how close you are to reaching goals for retirement. Now, I like to, again, focus on coming back to that first home page. Now, the Learning Center is here at the bottom. The Morningstar Retirement Manager is here at the bottom. And again, you can change investments here at the bottom under this tab, or under Manage. Again, you're not going to see all the same tabs, but you will see under Manage investment changes. And the quick links, you're going to see statements where you can view your statements now online. It will archive all of your statements the last 24 months. This is really nice, especially me. No matter how much I try to sort or file my mail, I can never find all my paperwork when I need it. So here it will file up to the last 24 months. So you have everything listed here, your quarterly statements, if you need to print for whatever reason, and you can even custom your statement, whether it's within the last 30 days or the last 3 years, or custom a certain time period, whatever you might wish. It's really simple to do that here. Going back, my favorite retirement planning calculator, this here is going to front and center give you the option to upload a personal photograph of how you might envision personally your retirement. And do not be discouraged if the photograph is not 100% of the way there or in focus. This is including an assumption, an estimate of your Social Security. It's including your employer contributions, but we want you to also incorporate any of your other savings so that you can help bridge the gap. So this gap here can be filled by personalizing this generic calculator. So when you click on Let's Go, it is looking at the essential expenses in blue, and in the teal green are your healthcare expenses, and the non-essentials in gold orange. Now, before I go through the specifics there, I'm going to show you these tabs here at the bottom, and we want you to include, first and foremost, other income. So you have these different tabs. Other income is a priority because the calculator doesn't know, are you going to receive any other income from brokerage accounts, savings accounts, cash balance, pensions? So add any other income, any other IRAs. Now, I've had participants mention they were expecting to receive a monthly income from rental properties that they've already invested in. I had one gentleman that mentioned to me he was anticipating to receive an inheritance as a lump sum within the next couple of years because his grandmother recently passed. He was the power of attorney and the only grandchild, and he was inheriting money. So with that inheritance, he knew the date in the future that he is estimated. But I also met with someone who was already a retired military veteran and mentioned to me that after receiving his pension, he was bored and decided to return back to work full-time and was already currently receiving. Now, if it's something that you're going to receive in the future, you can click an other date. So again, adding any pension balances, any other savings that's not going to be included in your John Hancock retirement account. Because if you do have another retirement account that you are planning to roll it over, do not add it here, because then once you roll it over, it's counting that number twice. Or if you do count it and decide later to roll it over, you can always delete the account here. But again, you're telling the calculator, oh, wait, I have all these other savings, and that's going to help your forecast on your goal, reaching your goals and reaching your target. Now, also scrolling down, it's looking at your estimated Social Security benefit. And the estimate here is pretty spot on usually, but if you have gone on the Social Security's website and you receive a more accurate number, include that here. I've been finding that when I had met with participants one-on-one, it's usually within $100 of the estimate. And this participant wishes to retire early at 62. If you're retiring earlier, this number will be lower, the Social Security. If you're retiring later, the Social Security number will be higher. So again, you can put whatever age you wish, or you can even exclude here, but go on to the Social Security's website to see what that number is. And in fact, on the retirement tab, I always say, yes, even if you think you want to retire early, let's go with full Social Security age. Let's start with that full age to see how close are you on target to reach your retirement goals. Plus, where are you planning to live when you do retire? Are you going to stay working, or pardon me, living near where you work in the Chicago area? Are you going to own a home or rent a home? Are you planning to maybe move? I've had people that mentioned, well, I have family in Indiana, cost of living is a little bit lower there, I'm planning to move. So you can also even include city, suburbs, country, etc. So be specific, because the cost of living will vary depending on where you decide to retire. Now, the Health tab, this is a new optional feature, and this is where you can estimate what any future healthcare costs might be. And this is where we want you to review, especially if you have history in your family of cancer or heart disease or diabetes. You can click through here, give more specific detail, and that way you can be better prepared, again, for any estimated healthcare costs. It's not a guarantee, but it's just a nice way to estimate, especially with the cost of healthcare on the rise. We want to give that optional feature. And know that this information is saved here only for you. It's not going to be shared with anyone else. Your privacy is protected. Under your profile, we want you to review your annual income, but also your gender and ethnicity. This helps with estimating your life expectancy, whether male or female, etc. And finally, although you're not contributing, I'm going to come back to the contributions tab in just a moment, but once you add this detail information, now we see that your credit score has increased. Now it's up to 76%. And what does that mean? It's saying 76% chance of covering your expenses. So it's showing you what your income is compared to what your goals should be, so that you can maintain your standard of living for each and every year of retirement from age 67 and on. Now, this is showing 20 years of savings. You want to have enough for each and every year. So the blue are the basics. Again, the teal green healthcare, and the non-essentials are your necessities. You can always click here under the Guide Me tab to see different personalized tips to consider on how, if you might need help on getting on track. You can click here to show more, and it's giving you, again, different ways to just get a more comprehensive view of your retirement accounts, different things you can add. So go through the Show Me More, look at all their different tips. Here at the top, you can scroll and take a tour of how to better understand, or you can click through to read more details on your expenses, etc. But I always say, even though this plan is depositing employer contributions only, well, you should still consider on your own. What if you saved, because you added in the profile your annual income? Well, what if you save elsewhere? 4%, 5%, 6%. You can play around with the numbers here and see how much should you be saving on your own. And this is a really, really rough estimate, but it's showing, give or take, 10% of your income. Then hopefully you can be closer to reaching your goals. But again, this is a generic estimate. I always say it's similar to a GPS. When if you're going someplace and you plug in an address and the GPS might say you're going to arrive to your location at 10:32 a.m., well, it doesn't know if there's traffic, construction, you need to reroute yourself and take another route. So you might not make it precisely on time, or you might get there a little bit earlier. So the same concept with your calculators here. These are rough estimates, never a guarantee, but take a look and see, are you on track to reach your goals? And again, try to even save more, because especially if longevity runs in your family, like my husband, for example, his two grandmothers passed away. Each were over 100 years old. So I told my husband we need to save a lot more to make sure that we have enough savings to last us through retirement. And even working later, I'm hearing more and more people say, okay, well, I see that I'm at 100% here. Well, what if I worked until 70? How much more would I have? 70 seems to be the new 60, and more people are working later. Or what if I wanted to retire earlier? Well, then how much more would I need to save if I wanted to retire at 65 instead of 67? Well, then how much more would I need to save? So again, you can play around with these numbers, call our 800 number, and they can walk you through it as well. So front and center, when you log in, you'll see and be able to just get assumptions and hopefully get a better view of how you're on target to reach your goals for retirement. So go online, look at the retirement planning calculator, scroll to the bottom. Again, you can view your investments and make changes, go through the Learning Center, so many great tools there, very user-friendly. And I hear oftentimes participants saying to me, wow, thanks. Now I feel a little bit more relieved that I am on track, and others who say, oh, okay, this is a little bit of a reality check. Now I know that I need to start saving elsewhere or saving more, and I get it. My father worked for a factory for 32 years of his career, and he had a pension and was receiving employer contribution, and he decided to save on his own. He didn't have a fancy investment counselor or financial advisor, but he was saving in his own account and saving more individually, and that afforded him the opportunity to be able to retire early. And I remember my uncles who also worked in a factory, and they said, oh, I have the pension, I don't have to save more on my own, that'll be plenty. But they didn't have enough to retire early. They had to stay to work until full retirement of 65 or 66, I can't remember. They stayed working later than my dad, or my dad retired right under 60 years old. So again, these are just opportunities and tools for you so that you can better prepare yourself for your futures. Important disclosures I'd like to share also with the target date funds. Yes, they are automated. Yes, they are defaulted, but it doesn't necessarily mean that that's the right one for you. Do the risk tolerance quiz. The risk quiz is going to help you determine, are you a more aggressive or a more conservative investor, and perhaps make a change there. Also, just because maybe your colleague might have investments somewhere doesn't mean it's necessarily the right one for you. Each individual, each investor is unique. So based on your retirement goals, based on your savings, everyone's going to invest differently. Take a look at those investments online. Check the performance, although remember, past performance never guarantees future results. So I will leave you again with our website address, your dedicated 800 number. Please keep in touch with us. I hope that everyone is safe, happy, and healthy during this pandemic season. I can't believe a whole year has already passed. I remember last year in April when I was scheduled to be there in person to meet with you, and everything was shut down, and for security, we didn't want me to travel on an airplane and bring germs to you. So still we're in the same situation, but hopefully in the future, I am looking forward to be scheduled to meet with you in person. In the meantime, keep in touch with us, please. myplan.johnhancock.com. Check your investments, see if you want to stay with the automated or change anything, or go on your own and use the Morningstar for guidance. Call our 800 number. We can help you with any questions that you have. Have a great day, everyone. Take care.